The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the February 20th, the terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day, and let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email. Send it out to steve@tfnn.com. Inside the subject heading, please put radio show question. And, of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we begin our day with indices trading to the downside. We've got the Dow off 554 points. S&P's down 52. NASDAQ 100, 222. Russell is down 30s. Tranny's down 156. Semi's down 39. You got gold, that's trading up $18. Silver's up 37 cents. Light sweet crude is up 46 pennies. Natural gas is down 18. Copper's up in nickel. We got plenty to look at out there. Right, I've got on my charts right now is NVIDIA. NVIDIA's got that completed that TD9 count top yesterday. A new profile has formed today. So the level of resistance up, bullish structured profile. Resistance at 140.57. Odds favor that price will get down towards its buy zone. That buy zone is between 130.52 and 131.95. That's on the daily time frame. We can see as the TD9 count pattern on the daily time frame was forming, the weekly chart was hitting its oscillator and change line up at 143.79. So again, resistance held there. On the monthly chart, let me populate this and get our date out here. You've got a Rhodes Momentum Indicator top, and you've got support at 109.42. So and you're trading 137. That was a monthly time frame chart. So that's not really not coming into any concern. There is a level, if you watch 137.08, that is a TD9 count 30-minute breakout level. So I'd say 137.08 is going to be the key. That's going to tell you whether or not price is going to head lower or not. That's its breakout area. If we get it could close below that on a 30-minute time frame, odds open up the door. We'll move back to the 133.15 level. If we take a look at other signals we have out here, the XLP consumer staples sector is completing a TD9 count top today. Let's go see what this is doing. It's really not down. It's down, 48 cents? Not that big of a not a gigantic move. What it is doing, though, it's trading back above right now the top of that daily profile. So it's a bear structured profile formed a couple of days ago. Resistance up at the 81 even Steven number. We're at 81.06. Price closed above 81. That TD9 count. Now, the TD9 count pattern is going to complete today. So it makes a higher high today. Then that becomes the top. If it doesn't make a higher high, doesn't have to. Yesterday's TD9 count would be the key level. But you would be watching yesterday's high if it does not make a new high today. If we get a close above that tomorrow or the next day, whatever, it being 81.58, it negates that signal and says we move higher. The weekly chart is saying that it wants to move higher. Closed last week above profile resistance. We're trading above it again this week, it being 80.30. So a second technical close above that's going to suggest higher price. The monthly chart is taking on a oscillator and change line. That's at 80.68 is where that is trading at. If you look at the 30-minute time frame chart, we had price gap down this morning, gap down right to its breakout level. You got 80.56. Folks, learn the TD9 count pattern out there. This is what I can guarantee you. We've got some of the most extraordinary traders inside the Tiger's Den. Now, I throw this challenge out there. I'm going to make this statement, but if it's not true or you believe it's not true, then I'd love you to give me a call, but maybe you just type something in and we can discuss that. But what I was going to say is I don't think that as excellent as all those traders are, I am is nobody would have picked out 80.56 as a level of support. It's looks like a random swing point in the middle of plenty of others out there, but it's not so random out there. It is an objective level of support and resistance out there. It never continues to amaze me as to how well both the TD9 count levels work for us, as well as those TAS market profiles. So watch that 80.56 level. Certainly, if price closes below that, the XLP would be headed lower. You've got the technology sector. The technology sector, I believe that has a completed TD9 count top. But let's get that up here, the XLK. Let's see if we've got any new profiles. We do not. So, we do. We do. So, for you bears out there, this is not a good message. This is the number one sector inside the S&P 500. That number one sector just formed new profiles below price. When you form new profiles below price, that is a bullish message. That doesn't mean price won't pull back to test support. And in fact, it should pull back to test support because it completed that TD9 count top yesterday. Now, what price should do, it turns out that the oscillator and change line is at the exact same price or very close to where the top of this new profile is at. So a pullback inside the XLK to 237.94, that would be normal. Watch that. If that level holds and price begins to rally off of that, that's telling us that it's going to go target that TD9 count top, maybe take it out. Now, in the case of the weekly time frame chart, the weekly time frame chart would need a close above 241.06 to negate its Rhodes Momentum Indicator top. On a monthly time frame, we don't have, you've got a TD9 count top. I take that back. And that high is at 238.14. If we were to close above that at month end, that pattern would get negated. Here on the XLK, look at this. It's 30-minute time frame chart. What did it do this morning? It pulled back and tested and rejected its breakout level of support of 239.20. God, you got to love it. So we've covered NVIDIA. I think we've covered everything that's showing up on my on this set of charts here. So let's do this. Let's go take a look at the daily equity future contract. Yeah, boy, there's tons of information there, or a piece of information that you need to be aware of. And that is the new profile that formed. I posted this inside the Tiger's Den earlier this morning before I went to makeup. And because price was testing that 21,959 level, that was the bottom of its profile. Certainly what I didn't want people to do is try to jump onto the short side then, because the NQ was pulling back to support. When I say jump on the short side, I'm referring to all the markets, because the NQ most certainly can lift the boats higher out there. So this is a new profile that formed above the prior profile. That's a bullish message from that standpoint. I don't have a topping pattern inside of the NQ out here, but watch the 21,959 level. You know what? That's a key level out there, not just because of this morning's low, which was just slightly below that. The actual low of the morning is at 21,951 even out there. So watch that 21,959 level. We look at the other equity future contracts. The ES Mini is testing its oscillator and change line at 61.21. You want to watch that at day's end. The close below that would indicate that we're likely to head lower. And we do have the Dow and Russell 2000 both trading below profile support right now. 44,374 and 2265, respectively. Steve Rhodes with TFNN. We get back from this break. Let's go look at some of the requests. Goro, Palantir, Carvana, the U.S. dollar, Oracle, gold, natural gas, Wolf, and on. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. Let's start on some of the requests that have come in. This first one is actually came in yesterday afternoon, very late in the show, and it is for Marty, and we're taking a look at Goro. G-O-R-O is the ticker symbol. Marty, let's start with the monthly time frame. This, by the way, it's a penny stock. It's trading at 40 cents. It closed above the top of its monthly profile last month, so that's a bullish signal, suggests that it wants to run higher. When we look at the weekly time frame chart, it did complete a TD9 count top, and this week it has accomplished its outcome, which was to pull back to test that oscillator and change line. That's at 30 cents. It tested that level. It's exploded off of that. You're inside a bullish structured profile. This is suggesting that price would run up towards 49 cents. That's both its TD9 count top as well as the top of its profile. The daily time frame, as price was pulling back to test that weekly oscillator and change line, was forming a TD9 count bottom for the daily time frame. See how when you put all these things together, just how easy or easier it is to be able to read the charts? Like, let's take a look at it in slow motion. Let's forget about the monthly time frame chart, although it's important to know that on the monthly time frame chart, price is above resistance. So that says, okay, no reason for it to not move higher. Then we move over to the weekly chart. We see a TD9 count. What do we know about that? We know that any topping pattern, that happens to be one of them, price should pull back to test that oscillator and change line. Certainly support out there. When that TD9 count pattern was forming, profile support was down around 25 cents or so. Since then, a new profile has formed. And in fact, that was the outcome. Price got back there, tested it, rejected it, and now it should continue to move higher. When price gets back to a support on a weekly time frame, we look to a daily chart. And if a daily chart is forming a bottom pattern out there, it tells you that that low should definitely hold out there as you put that together. That is exactly what has happened. Now we have a profile change in trend on the daily time frame. Or we will if we get a close above 39 cents. We're at 40 cents right now. So if we get that, Marty, that tells you that price should go target 47 cents. So you'd have two targets, 47 cents to the upside and 49 cents to the upside. A close above 49, and you should be back off to the races to the upside. So thanks for waiting an extra day. GOR tomorrow. That was for Marty. Let's go take a Palantir for Mr. Bill inside the Tiger's Den. PLTR is a ticker symbol. Let's do the same thing here. On a monthly time frame, we can see that, boy, this is what, 6, 7, 8, 9 months in a row to the upside of higher highs out there. The weekly chart is saying, okay, I'm ready for a retracement. Why? Because it's showing that it may form tomorrow a Rhodes Momentum Indicator top. Will likely form a Rhodes Momentum Indicator top. But what is it going to do? Well, it should pull back to test its oscillator and change line. That's at 94.05. We've gotten down to a low today at 95.80. So the work is still not done to the downside on that, but we're going to take a look at the daily time frame chart. And as we do that, we'll see that yesterday, Palantir formed that Rhodes Momentum Indicator top. That was confirmed with that bearish engulfing candle. What price was also doing yesterday was, as price pulled back, it tested and held support, 110.25. Opened up this morning, gap down below that level. So on a daily basis, the next level of support would be at 78.47. So what are the charts telling us? The charts are telling us on a daily and a monthly time frame that we have a top. The weekly chart, the daily and the weekly time frame that we've got a top. Since we are trading below profile support or any support really in the Palantir on a daily time frame, we look to the weekly chart. Its next target should be that 94.09. If price closes below that, then we'd be looking at 80.91, which is the top of its weekly profile, and below that would be the daily breakout level at 78.47. So that's what's going on. We take a look at Palantir. Looks like it's getting set up over time to create a buy point. And I'd say that 78.47 to 80.91 looks like a pretty good area at this moment in time. Let's go take a Carvana out there. CVNA, this is for Marty inside the Tiger's Den. So Marty, here we'll start with the daily time frame. The daily time frame shows I don't see any top out there for the daily time frame. However, all in one day, you're going to get both a profile change in trend, and you may get a close below breakout support, which was 240.97. We're at 238.45. So volume on this thing, got to imagine there's volume today to the downside. Volume so far is 6.5 million shares. When this thing was making a high yesterday, was 7 million shares, almost 8 million shares. So big volume coming out of this. A close below 240.97, Marty, is going to tell you that you have lower price to where? Well, on a weekly time frame, we can see that very likely this will go ahead and form a Rhodes Momentum Indicator top for its weekly time frame. Price is back inside its profile. It's also now trading below its oscillator and change line. That would have been a level of support. So two areas of support have failed. Where's the next area of support? What's it say on my chart? 212.59. Now, when we look at that profile, what we should notice, or what I see, is a slightly bullish structured profile. So there's a buy zone inside of Carvana. If you're asking me where's Carvana headed back to, I would have to say between 184.71 and 212.59 out there. That's in lieu of any new profiles that form. And when we look at the monthly time frame chart, the monthly time frame chart, we had a negated TD9 count pattern out there. There's nothing bearish about the monthly time frame. It was trying to stretch its way up to 209.50, but it's going to take a pit stop, and it's going to have to rely upon the daily and the weekly to generate when that next bottoming pattern forms out there. We were up 6 straight weeks to the upside inside of Carvana. No reason for us to not pull back for at least a 2-week move out there. So, Marty, hope that helps you out with regard to that. No Spin wanted to take a look at the U.S. dollar. Now, I don't have my black background screens up out here, and I'm doing that because just because the computer's got issues when I do that. So what I do, I grabbed the wrong thing. So we're going to take a look at the U.S. dollar index, but what I have is really yesterday's close out here. When you look at the very right-hand side at 107.70. What I do know, at least earlier this morning, we had nothing more than a consolidation with inside its profile. So the profiles are not going to change out here, no spin, and you've got a support zone, a buy zone between 106.64 and 106.84. Resistance is at 107.23. Above that, it will be the oscillator and change line, which is about 107.49. Now, when we take a look at the euro pulled back, tested and rejected its oscillator and change line. It's moving higher. Its price target is the 105.39. As this moves higher, we're trading above yesterday's high out there. As this moves higher, the dollar will get weaker. But the Japanese yen is pulling back, and negated is by the D-point pattern, or it's negating it as we speak right now. And it is targeting its breakout level, 149.36. Hasn't gotten all the way down there, but likely will, may even break through that level. As the yen moves lower, it's getting stronger. Dollar would be getting weaker out there. So you got dollar getting weaker on the Japanese yen, dollar getting weaker on the euro, and dollar getting weaker inside of the Great British Pound. So what that tells Stevie, I don't even have to go pull up a current chart for the U.S. dollar index, it ought to be testing that buy zone, the 106.64 to 106.84 level. I don't know if price is trading below that or not. But that's what it's likely doing, is testing those levels of support. Now, what you'd be watching is that 106.64 level. If price closes below that today, then that would be triggered, or the signaling to you and I, that the U.S. dollar index would likely pull back to the 105.74 level. That is its TD 9-count breakout level. So no spin. That's the best I can do for you on the dollar with my white background charts. You tell me, where's the U.S. dollar index trading? Is it trading in that profile support level, or is it trading below 106.64? Let's go on to our next request out here, which is to take a look at Oracle. Stevie's got to find that chart. Where did he put it? Is it right here? It is not. That was Carvana. It's going to be the next one. So we take a look at Oracle. You've got Oracle trading out at 175.16. It's tested a key level of support on the daily time frame. And that is its oscillator and change line. That number is at 174.93. If price were to close below that, that would be suggesting to you and I that we would have a further retracement. That further retracement, well, let's come back from this break and we'll finish taking a look at the Oracle charts. Then we'll take a look at the gold contract, natural gas, Wolf, ON, AIFF, FTAI, FXI, and KWEB. At least that's what we've got in the system. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are February 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Still got the Dow down 591, S&P 48, NASDAQ 100, 188, and the Russell's down 30 points. Let's get back to Oracle, see what it's communicating to you and I. Oracle chart, if we take a look at that daily time frame, as I had mentioned, it is testing a key level of support, 174.98 or so. The next level of support is 176.26. That's the top of its profile. If it closes above that, the retracement today was nothing more than a pullback to test support. Now, resistance is on the weekly chart. That's that oscillator and change line. So gray rock, you can see prices inside a bullish structured profile. Ordinarily, when you get above the center of that bullish structured profile, buyers have the ability to push price up to the top of the profile, 193.72. You've heard me say that many times. I'm just kind of saying that again right now. But what we do know is before price can get that 193.72 level, it's got to clear that oscillator and change line. So that's going to be your next resistance level. That's at 180.52. If price were to close below the daily oscillator and change line, that opens up the door for a further retracement. The further retracement has a buy zone on the daily time frame between 156 and 160. I'm leaving out the cents out there. The weekly chart has got a buy zone between 161 and 166. So those would be the areas that you would be looking at, 164 or so on the monthly time frame chart if price were to move lower inside of Oracle. So that's what we've got, Gray Rock. Hope that helps you out. Let's go take a look at the gold contract for Ron. Ron wants to look at that daily, weekly, and monthly time frame. So on that daily basis out here, we're at a new all-time high. We've made a new all-time high. We need to see gold close above the high from February 11th, and that is at 2968.50. That would negate a TD9 count top. If that does that, that would be bullish. Then finally, you need to see gold close above the same price level, 2968.50, because that on a weekly basis was a Rhodes momentum indicator top, a bearish shooting star candle. So those are the levels to be watching. Now, Stevie's a little bit concerned out here, at least earlier. When I say early, when gold was actually trading higher, we were not at new all-time highs in terms of any of the major currencies: euro, yen, pound, won, Swiss franc, krona, Aussie dollars. We were only at new all-time highs in terms of U.S. dollars out there. But we were at new all-time highs in terms of most of the Middle Eastern currencies out there. So it just seems like what gold is communicating to us, what buyers are communicating to us, is things aren't going so rosy over in the Middle East out there. That's the best read that I can get on it. Technically speaking, it's going to really be all about a close both today and tomorrow. So let's just make it tomorrow. Close above 2968.50. If we get that, you can see we're in bar number 8 on a monthly time frame, but those tops would get negated and we likely continue to move higher out there. So Ron, that's what's going on. We take a look at gold. You want to look at natural gas as well. Natural gas pulling back after a big move. If we get a bearish reversal candle today, that would then generate a sell the D point pattern out there. That sell the D point pattern would suggest that price would pull back to test support. Well, on a daily time frame, that support level would be its oscillator and change line. So currently printed at around $3.80 out there. On a weekly chart, what you really want to see this do is close above its TD9 count top. And that TD9 count top is $3.77, 3.778 to be exact and to the T out there. So you want to watch that level for tomorrow out there. But it does look like price wants to pull back to that 379 level out there. So that's what's going on both with natural gas and with light sweet crude. Not much to really report on the monthly time frame. It's bullish mode out there. So it's really the daily time frame. It was up for 6-7 consecutive days. Wouldn't be surprised to see at least, and maybe only, just simply a 2-day retracement out there. So hope that helps you out. Let's go on to our next request. The next request was to take a look at Wolf, WOLF. Oh, you know what? Shoot, doesn't matter what I did. We'll take a look at WOLF. I'll try to get it out. First, let me tell you where the real key resistance is on WOLF, because I can't say Wolf for whatever the reason. It's at 804. It's between 804 and 812. 804 happens to be the monthly oscillator and change line. Now, let me repopulate the chart out here, and let me actually open it up as well. That's the Wolfman. We're going to cry for the Wolfman out here. Look at this oscillator and change line. Price has been below it since October of 2022. You tell me just how important is that line with regard to analyzing Wolf out here. Now, you've got a TD9 count bottom that is likely going to go ahead and form at month's end. That would be, what, next week? I think next week is the end of the month out there. So you're going to get a monthly TD9 count bottom. But you're really watching, again, now look, just clearing the oscillator and change line at 804, that's a positive for sure. But then you've got a bit of resistance up at 964. So that would just be telling us that we'd likely rally up towards that level. Now, that's coming from the monthly time frame chart. Let's go see what the weekly and the daily charts are telling us. The weekly chart needs a bullish reversal candle to confirm a Rhodes momentum indicator bottom. Price is also trading below profile support at 812. So remember we said, I think it was 804, and I said 812 was the number. You really need to see it close above 812 out there for that weekly and monthly chart to be giving us some rosy information, which it should, because the daily chart has a profile change in trend. So what is it that's slowing it down out here? Well, if we really look at the daily time frame chart, we can pretty much see sideways action out here ever since about December the 26th out here. So it's really trading in a sideways-ish type consolidation out there. That's the best that I've got for you on WOLF. I hope that helps you out. Now, I believe you also, I know you also, I don't believe it, I know you also want to take a look at ON out here. So we take a look at ON. What it's doing today is it's running right up into TD9 count breakdown resistance. That's at 56.28. We traded above it, but now we pulled back and we're inside that. So you're looking for a close above 56.28 today, Dunk. If you get that, that's going to be a bullish signal. But at the same time, and this is what the chart is dealing with here. At the same time, it's testing a resistance level in the daily time frame. It's doing the exact same thing on the weekly time frame. And that exact same thing is its oscillator and change line. Currently at about 55.72. It's actually just a few pennies higher than that. It's up at the 55.85 level. So what you're really looking for is, can price close above 56.28? That's that daily TD9 count breakdown level. If it can, then your next battleground is going to be at 59.40. At 59.40 would be the weekly profile resistance level. Now, on a weekly time frame, you have a beautiful TD9 count bottom that's going to go ahead and complete this week out there. So you've got the bottom. What that tells you is you need to know about that last week's low, because if price ever closed below 46.57, we're headed lower. And that's a possibility. Why is that a possibility? So the B point of an A to B equals CD pattern on a monthly basis for ON, 168 million shares is April of 2024. 168 million shares. And that low is 59.34. Obviously, we're trading below that. With volume, last month it was 182 million shares. So 182 million shares took out 168. ON has a confirmed A to B equals CD pattern to the downside. Let's see how quickly we can draw this in here. Here's A to B, or just about. I'll just simply move this over to where that C point would be. And that tells you that ON has got a confirmed A to B equals CD pattern to the downside around the $30 area. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We're looking at ticker symbol AIFF. We can draw in an A to B equals CD pattern on the upside. It'd be like 1 to 3.618 or something like that. We did get that gap to the downside a couple of days ago. Look, this is what it's doing right now. It's trading with inside a very wide-ranging profile. The top of the profile is at 1579. The bottom's at 447. Percentage-wise, that is like ginormous out there. But here's the deal. Right now, price is trading below that green oscillator and change line, so that's not a good scene. That tells us that it has lost its momentum to the upside. And it closed below 812 today and tomorrow is going to suggest that this is going to pull back to 447. In a period of 1, 2, 3, 4, 5 days already, we've gone from 16 down to 7. And it looks like this wants to get down to the, I'll say the 580 to 447 area. 447, bottom of the daily profile, 580, top of the weekly profile out there. At $9, we know that that is a key level of resistance. It has now been tested twice on the monthly time frame. And so if you ever see it close above on a monthly basis, $9, AIFF, it's not going to be if it's going to head higher. It's going to be when is it's going to head higher out there. But right now, we're looking at this moving lower. The price range, 447 to 580. Dr. Bill, or Dogter Bill, hope that helps you out. Hector and Patty want to take a look at ticker symbol FTAI. So FTAI right now, gap to the upside, negated never had a TD9 count pattern. It had a sell the D point top, so that has now been negated. Hector and Patty, the daily time frame chart, this 4 days in a row to the upside out here, suggesting it wants to make a run for its TD9 count breakdown level. That's up at 171.81. The weekly chart definitely supports that. When I say definitely supports that, I mean that it's traded above all resistance. So it's in breakout mode. It's traded above the top of the profile at 117.69. It's traded above its green oscillator and change line at 139.07. So it's suggesting it wants to get up towards its Rhodes Momentum Indicator top. It's trading into that swing point. The swing point I'm referring to is January 10th. That had volume of about 8 million shares. So far for the week, we are in with about 8 million shares. So we're pushing into that swing point with volume. What you'd love to see this do, Hector and Patty, is see this close above 150.49, the low of that January 10th candle. Do you have to close above that? If you close above it, it increases the odds substantially the price will test the high being 181.64. If it tests and rejects the low, it just tells us that the low would get tested again out there. So that's how you would make the interpretation of FTAI out there. On a monthly time frame, things are all hunky-dory out there. You had a 2-month pullback after trading higher for a gazillion months out there, pretty close to a gazillion. And so this looks pretty good. Really just have a 2-month pullback and now to be moving higher like this. So hope that helps you out. Always good to hear from you. And have a terrific day out in California. Dan wants to look at FXI. This is Dan in New York City. We look at FXI right now. It's trading out. It's going to complete a TD9 count top today, Dan. What that suggests is price should pull back to test support. The first level of support would be its oscillator and change line on the daily time frame. So it's in the 3430-ish type area. 3437 is the current print. But we also see that not too far below that is the top of its profile. So I would say that the FXI should target 3412. Now, if it closes below 3412, then it opens up the door for a further retracement. The further retracement could take us back to its breakout level, which is at 3220, which is very close to its buy zone, which is between 3216 and 3265. So TD9 count topping pattern completing today. I do not know if the high of the day is in. So far, the high of the day is at 36.26. If price were to close above that, it negates that signal and we head higher. Now, at the same time, a daily TD9 count pattern is being completed. You have the weekly chart getting up to resistance, and that was the top of its profile, and that was at 36.28. For the week, the actual high is 36.26. You gotta love it. On a monthly time frame, we do not have a I take that back. You do have a confirmed sell the D point top out there. However, its work to the downside may be done. If price closes the month above 34.92, you will have a profile change in trend. So I don't know whether we'll do that or not, but if it does, you'll have a profile change in trend, and that suggests that it wants to head higher, at least on a monthly time frame. But right now, you got to deal with the daily time frame. That's the one to keep your eye on. And right now, price should pull back to the 34.12, 34.37 level. So hope that helps you out, Dan. You also wanted to take a look at KWEB. So let's pull up those charts out here and see what we've got. On a daily time frame, wow, you're picking out these TD9 count patterns. KWEB going to complete a TD9 count pattern today. Guess what's going to come out of my mouth next? We should expect price to pull back to where? To pull back to support. Where is support? Turns out it happens to be the top of a new profile that formed yesterday, and it's green oscillator and change line. So KWEB should pull back to the 34.14 level. If it gets below that, that's the top of the new profile that's forming. Then we'd be looking at 33.32, 32.51, maybe even 31.57, although I doubt it. On a weekly time frame, out here, everything looks bullish. You're inside a bullish structured profile. You're above the center of that level at 33.37. It says longer term, it wants to go target 39.17. It's right into resistance on the monthly time frame. So at the same time, you get a daily TD9 count top. You can see on a monthly basis, price was hitting resistance. And that was at 36.27. So KWEB should pull back to the 34.14-ish area next. Dan in New York City, hope that information was helpful to you. Dude wants to take a look at STAI. So let's go take a look at it. STAI is what? It's printing out. So this is a IPO. Looks like relatively new IPO, came out back in January. So we've got basically limited data here. And when I say limited data, I mean limited data. Now, this did form at the bottom, so you got to love that. It did form at the bottom on a daily time frame, that being February 12th out there. It did form a Rhodes momentum indicator bottom, and boy, has it been a rocket ship since then. Dude, where's this headed to? Well, what I can share with you, I don't know where it's headed to. What I can share with you is there's no topping signal. You're in bar number 6 to the upside today. You are in only it had a one-day pullback out there. That was yesterday. Looks like it wants to head higher. It'd have to really go start dropping down into intraday charts, and I'm not even sure we've got enough data out there to really provide us with a ton. So the best I could do for you is it does look like it wants to go higher. Reason being, we've got a nice daily bottom pattern. There's no profiles. There's no nothing. And just there's no topping signal out here. So I hope that helps you out. Nicholas wants to take a look at JP Morgan. And his question is, how low can this go? So let's go take a look at JP Morgan, which right now is So here's your answer to your question. Let's get right to it. The price has been traded above a bearish structured daily profile. If the move to the downside, it's a relatively large move right now. If the move to the downside is only a counter trend move to the downside, JP Morgan will find support between 262.12 and 264.61. We're not there yet. We're trading at 266.88. On a weekly basis, price is testing support right now. That happens to be its green oscillator and change line. That is the level 267.50. Now it looks like we're going to get a Three River Evening Star topping formation. That would confirm a Rhodes Momentum Indicator top out there. That's going to make that 262 to 264 level really important. But Nicholas has got some puts on this out there, so you got to be careful about that level 262 to 264. Steve Rhodes with TFNN. We come back, we're going to take a look at CELH for Martin. Be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We're taking a look at ticker symbol CELH, just for Martin B. And if we take a look at the daily time frame, so this is definitely, we look at all three charts, daily, weekly, and monthly, definitely trying to form a bottom out here. You're in bar number 9 on the TD9 counts for its monthly time frame out there. Now, this can form the TD9 count, can be the bar after bar number 9 that identifies that bottom. But the monthly chart right now, you're in bar number 9. It's suggesting you could see a bottom that's really forming this month out here. So if it's forming a bottom, the weekly ought to show us a bottoming signal. Now, there's a Rhodes momentum indicator signal. We don't have that bullish reversal candle. We're still trading below profile support. What I can share with you, at least at this moment in time, is your real key level of resistance. If this is going to rally or should rally further, if it's only just a counter trend move, Martin, it will find resistance between 27.35 and 29.47. If price closes above 29.47 on a weekly time frame, it's going to tell you it's more than a counter trend move. You'll still have a battle. That next battle will be 34.77. But it would tell you that, okay, you likely have a solid bottom. With an eventual price target of 39.41 out there, or the 43 level, that being the bottom of the current monthly profile, or the monthly oscillator and change line. The daily formed a TD9 count bottom a half a dozen days ago. It formed a Rhodes momentum indicator bottom 5 days ago. What price did was it ran right up into resistance at TD9 count breakdown level, 26.21. Today is an inside bar. An inside bar suggests, doesn't guarantee, but it suggests that the current trend should continue. That says the price should get back up to test that 26.21 level. That's the level you're looking for in a daily time frame for price to close above. Then that tells you, boy, you may really have a solid bottom inside of CELH. So thanks for writing in. Let's go take on our last request out here. This is coming in from Dano inside the Tiger's Den. And in this case here, he wants to take a look at Tiger, T-I-G-R, which is testing its daily oscillator and change line. So it's sitting at a support level. I don't have a topping pattern. I just have a new profile that is trading within, bullish in structure. If price were to close below that green oscillator and change line, the daily time frame around 814, you're likely to see a move to the 742, 763 level. But other than that, everything looks pretty copacetic. We got through all of those, which is a wonderful thing. Let's do this again tomorrow. I'll see you tomorrow, 11 a.m. sharp. Have a terrific Thursday, folks. Stay tuned for all the great programming. Take care and have a wonderful day.